Hi there, welcome to Kneppy Invest. I'm looking at 100 interesting stocks. Of course, I'm not going to be looking at all these 100 companies in the one video, so I have separated these 100 companies into different videos, and I decided to do a few themes. And in today's video, I'm going to be looking at two fairly similar companies. So I'm putting these two companies up against each other. And the reason why these companies are quite similar in terms of they're both small, they're both profitable, they're both into manufacturing, particularly stuff I know nothing about. So in fact, both these companies are in my manufacturing watch list. They've been around for a long time, particularly or including the ASX, and I'm talking about over 50 years. And they've had a fairly similar history over the past 10 years. And you'll be able to see that when we look at the revenue of both companies during that time period. The two companies I will be putting up against each other are Coventry Group and Korvest. These are both fairly small companies in terms of valuation. We're talking about less than 200 million. In fact, Korvest is less than 100 million. Yet, over the past few years, we have seen some pretty good growth with both of these companies. So what I'm going to do in this video is I'm going to look at the revenue over the past 10 years, looking at half-yearly data, also look at the chart, also have a look at what they do. And in fact, when we have a look at what these companies do, we'll actually go to their website, look at some interesting things we might see and discover about these two companies. Let's start off with Coventry Group. This company delivers innovative industrial solutions to the mining, construction, and manufacturing sectors. They supply a range of fastening systems, cabinet hardware systems, hydraulics, lubrications, fire suppression, refueling systems, and other products. They have quite a few brands, at least about 7 brands, including Cooper Fluid Systems, Torque Industries, Fluid Power Services, Nubco, Connect Fastening Systems. So just by talking about what they do here, I personally will never have the need for the Coventry Group. So let's just go have a look at About Us, have a look at the company profile, which should give an indication about the history of this company. And it just says here that the company was incorporated in 1936. So this company has been around for almost 90 years and listed on the ASX in 1966. So that's about 56 years as a publicly listed company. And you would think a company that has been listed on the ASX for 56 years probably is a fairly high valuation, but it's not true for Coventry Group. It's also not true for Korvest. So let's have a look at Korvest. It's a South Australian company with an enviable reputation within industry through being able to provide engineered solutions and finished products on time within budget. No idea what they do just by the sentence on their homepage. Have to dig a little bit deeper. Maybe it'll tell us what they do in the About Us. So it's been on the ASX since 1970 and has built a strong reputation for being a capable supplier of cable and pipe supports, industrial access and safety systems, fastening solutions, and galvanizing services. So what Korvest and Coventry Group are a little bit different from each other, but they both are into manufacturing. And Coventry Group has, 7 sort of businesses or subsidiaries. Korvest has 2. Easy Strut, which is Australia's leading range of cable and pipe systems. Well, Korvest galvanizes probably does galvanizing. So quick turnaround galvanizing of the largest, smallest, and most challenging construction infrastructure. What I'm going to do with both of these companies is look at very similar things. And in this particular slide, we're looking at Coventry Group's 10-year revenue and expenses. This is looking at half-yearly numbers. So we have 20 periods here. And the blue bars are the revenue, selling, general, and administration expenses in the black. Also included gross margins here. And I've already mentioned that the business trajectory for both Coventry Group and Korvest have been fairly similar. And you'll be able to see that when we look at Korvest 10-year revenue and expenses later in the video. But the main thing here is Coventry Group had seen their revenue decreasing from 2012 all the way to 2017. In fact, revenue fell from 124 million to a low of 75 million, which was in 2017. But ever since that low, and who knows why this business has turned around, Coventry Group have increased their revenue by a fair bit. In fact, it's more than doubled from 75 million to current revenue of 157 million in the most recent half year. Now, selling, general and administration expenses have increased alongside that from 27 million to 44 million, but gross margins have remained steady through this 10-year period, ranging between about 36% and 41%. So you'll be able to see also when we look at the chart that this turnaround in the business is shown when we look at the 10-year chart as well. The share price has coincided with the turnaround in Coventry Group. And as we turn our attention to Korvest 10-year revenue, expenses and gross margins chart, fairly similar story here. From 2012 to 2017, Korvest's revenue actually did decrease from 34 million to a low of 21 million. Again, that was actually towards the end of 2016. So the first half of financial year 2017, this company did see the low point in the revenue. But ever since that low point, revenue has climbed fairly significantly from 21 million to a current revenue of 51.6 million in the most recent half year. Just like Coventry Group, margins are staying fairly stable between about 34 and 44%. However, if you go back to 2012 to 2014, that's when this company saw their highest margins. And maybe the biggest difference between Coventry Group and Korvest, and even though Korvest have been increasing their revenue, their expenses are remaining stationary or stable during the last 10 years. So they're not increasing their expenses. So this company is becoming a little bit more profitable as their revenue climbs. So you can say maybe they are becoming more scalable than what we're seeing with Coventry Group. As we turn our attention to 10-year profits and operating cash flow for Coventry Group, times were not good for this company between about 2014 and 2017. They did not see one single half year for about 5 half years where they were profitable in operating cash flow. But business has turned around for Coventry Group, particularly the last 5 half years. This company has been operational cash flow positive and profitable on a consistent basis. Unfortunately, in the most recent half year, they were operational cash flow negative for the first time in 5 half years by 1.8 million, but they were profitable in that half year. As we look at Korvest, a little bit different here, a lot more positive when it comes to profitability and operating cash flow over this 10-year period. But things have really grown for this company over the past 3 or 4 years. They've grown income or profit to $7 million. And even though they were operational cash flow negative by $1.4 million in the most recent half year, there are some reasons behind that. So just by looking at this 10-year profit and operating cash flow, it just looks a little bit better than Coventry Group, particularly over the past 5 years, where we have seen some pretty good growth, particularly in profit after tax. Now, just going to look at the most recent half year for both companies, focusing on the cash flow statement and the balance sheet. Both companies have mentioned the similarities between these companies, and both companies were operational cash flow negative in the most recent half year. And whenever I see a company being operational cash flow negative, I want to understand why, particularly if they have been operational cash flow positive for quite a few half years in the past. So this is Coventry Group's consolidated statement of cash flows, only looking at their operation activities, and they were operational cash flow negative in this particular quarter by 1.8 million. Previous half year, or 1 year ago, previous corresponding period, they were operational cash flow positive by 3.7 million. So the way this breaks down, receipts grew by $30 million year on year, while cash paid to suppliers and employees grew by 34 million. So why is that? And to find the clues and trying to understand why this company is now operational cash flow positive on a half-yearly basis, we go to the balance sheet. One of the things that's not provided in the cash flow statement is changes in working capital. And the simplest definition for changes in working capital is when you decrease total current assets decrease total current liabilities from total current assets. And the things I'm looking for here are changes in inventories, changes in trade and other receivables, also trade and other payables, but also looking at changes in loans and borrowings. And if we actually look at the changes in working capital for Coventry Group, it really hasn't changed from last year to this. If we go back 1 year ago, if you decrease current liabilities from current assets, you get about 34 million. And this year, if you do the same thing, you get 34 million. If you look at inventories, they've actually increased their inventories by $12 million from last year. There's no significant changes when you look at, there's slight changes when you look at trade and other receivables, down about 4 million, but that is counterbalanced by a trade and other payables, which is down by 6 million. So it does look like the significant change possible significant change in their working capital was inventory. They have built up their inventory stocks or the levels, and one of the reasons they gave for that increase in inventory levels was as a result of price inflation and to ensure high customer service levels while there are supply chain issues resulting from COVID-19 pandemic. Now, the one thing to notice here as well is loans and borrowings. In fact, their loans and borrowings, total current liabilities, increased by $12 million, which was the increase in inventories. So it seems like they borrowed money to increase their inventory levels. That's why there was no change in working capital for this particular period. So at this point in time, because there was no change in working capital, it does seem like this operational cash flow negative half year for Coventry Group was actually legit. Now let's have a look at cash flow statement for Korvest. And just like Coventry Group, this company was operational cash flow negative in this particular quarter by 1.4 million, while the previous year they were actually operational cash flow positive by $2.7 million. So let's go have a look at the balance sheet to see if we can figure out why this company was operational cash flow negative in the most recent half year. Just like Coventry Group, I'm going to look at changes in working capital. And if we go to last year, total current assets were 33.9 million. Total current liabilities were 13.4 million. So the difference there is about 20.4 million. If we look at the most recent half year, current assets 38.6 million, while total current liabilities haven't changed at all, 13.4 million. So there has been a change in working capital for Korvest by the tune of about $5 million, because the total current assets minus total current liabilities in the most recent half year was 25 million compared to 20 million the most previous year. So that means there's probably been some changes in inventory, trade and other receivables, or trade and other payables. So let's have a look to see where the changes have been for this company. And straight away, we can see trade and other receivables up by 3 million, inventories up by 5 million, while trade and other payables down by 400,000. So there has been a growth in inventories and trade and other receivables. They've just mentioned in their commentary, operating cash flow impacted by working capital demand. So they've increased their working capital, inventories in particular. Increased due to strong November, December 2021 sales, and increased due to increased cost of steel and higher stock holdings to mitigate supply chain risk. So this is something this company has done, increased their inventory stock, and that has affected the operational cash flow for the company. So I do think this company could have been operational cash flow positive if they decided not to increase their inventory levels. Now let's turn our attention to the charts for both companies, looking at 10 years, and this is the weekly chart. And if we look at Coventry Group's share price performance over this 10-year period, you'll notice between 2014 and 2017, the share price of this company took a massive hit. And that period coincided when this company was not profitable and not operating cash flow positive. So again, the market was reacting to the financial performance of this company. And during that time span, the share price of this company fell from about $3.12 all the way to a low of 50 cents. And then the financial performance of this company started to improve, and we saw the market react to that, and the share price started to rise. The only time we saw the share price fall after 2017 was during the COVID-19 financial panic, when the share price fell back to 50 cents, a really good time to take a position in this company. But from that COVID-19 panic low of 50 cents, the share price has moved into a nice uptrend, and it actually has tripled in price from 50 cents to a current share price of $1.50, and definitely in a nice uptrend right now when it comes to Coventry Group. Now, if we have a look at Korvest, a fairly similar looking chart in terms of when this company was not performing the best financially, and that was between 2014 and 2017. That's when the share price of this company fell. It fell from about $8 all the way down to $2. And then it just went sideways for about 2 or 3 years, between about $2 and $2.50 or 60. And then we saw the share price break out in the beginning of 2019 around about $2.60, and the share price of this company has been in a well-defined uptrend since then. Even COVID-19 financial panic did not stop this uptrend that this company has been experiencing. You'll see some dips, and whenever the share price dips, looking at the weekly chart, that's the time to take a position in this company. And recently we saw the share price of Korvest get above $8, around about $8.25, and that was an all-time high. Well, maybe an all-time high, but at least a 10-year high for this company. We did see the share price pull back recently, pulled towards the 50-week moving average, which would have been a good time to take a position, but then has taken off again and currently is at $7.37. So the chart for Korvest looks a little bit more bullish than Coventry Group right now. Now let's have a look at a comparison of Coventry Group and Korvest, looking at some of the financial metrics and also valuation metrics as well. Coventry Group has the higher or the lower share price, $1.52 compared to Korvest $7.04. And there will be some investors out there, particularly new investors, who would just look at the share price and think Coventry Group has the lower valuation. But then you always have to look at the amount of shares on issue, and Coventry Group has about 9 times shares on issue, 91.4 million to 11.5 million for Korvest, which means Coventry Group has a higher markup, 139 million. Korvest is at 81 million. When we look at some of the revenue, profit, and operating cash flow, Coventry Group has significantly higher revenue, 308 million compared to Korvest 89. But Korvest is more profitable and has higher operating cash flow, 10.3 million for Korvest, 8.6 million for Coventry Group. That's the profit and operating cash flow, 2.4 million for Korvest, 1.5 million for Coventry Group. Now, revenue, profit after tax, and operating cash flow is all trailing 12 months. So it's including the most recent half year and the half year before that. Now to the valuation metrics. PE ratio, Coventry Group 16.2, Korvest 7.8. So you might be able to argue right now that the Korvest is looking like the cheaper option. Price to operating cash flow, 92.7 for Coventry Group, 33.6 for Korvest. I'd probably ignore that just because operating cash flow for both companies is fairly low. Price to book ratio, Coventry Group at 1.23, Korvest is 2.1. So on that valuation metric, Coventry Group is looking slightly more the better deal, that sort of thing. Now, return on equity, and a lot of people do like this. I like to look at this as well. Coventry Group at 8%, that's fairly low, but Korvest 27.7%. That's pretty high. I'm not sure if that is sustainable, because if you look at the history, return on equity for Korvest, it's not been that high in the past. So now let's compare Coventry Group to Korvest, looking at the history, business, financials, valuation, and trend. When we look at the history of both of these companies, they have been around for a long time. Coventry Group 90 years, Korvest Group for quite a while, and they've actually been on the ASX for over 50 years each. And you would think 50 years is a long time. At least some point during that 50-year period, either of these companies should have found some traction in the market. They should have been growing at a fairly good rate, but they really haven't shown that to the market over the 50-year period. However, in saying that, the last 5 years, both these companies have grown. The question is, can they continue that growth over the next 5 years? I think that is a big question mark for both of these companies, simply because of their past. When you talk about their business, I don't know these businesses at all and what they do, because I am not the clientele, the customers that these businesses usually are aiming their services towards. So I'll never have a total grasp of what both these companies actually do. So that is also a little bit of a red flag for me, and probably a major red flag for a lot of investors out there. Now let's have a look at the financials. And when I do compare Coventry Group to Korvest, I am just taken back that over the last few years we have seen some pretty good growth with Korvest. It actually probably has outshone Coventry Group during that period. And then you compare that to the valuation, Korvest does seem to be better value right now. The only thing that Coventry Group has going for it is larger revenue, in fact, triple the revenue of Korvest. So financials and valuation definitely in Korvest's favor right now. And when we look at the chart, definitely the trend is up for both companies, particularly on the weekly chart. If you delve deeper into the daily chart, Coventry Group is showing a little bit more volatility. Also, lack of trading in both of these companies, so fairly liquidly traded. That's something else you're going to have to pay attention to as well. But definitely the trend looks much better with Korvest just looking at the chart right now. So 3 ticks for Korvest, 0 ticks for Coventry Group. If I had to pick choosing between these two companies, and sometimes there is no choice. You can decide neither of these companies fits into your portfolio, or maybe you could decide both of these companies fits into your portfolio. But if I had to make a choice right now, I'd probably lean more towards Korvest over Coventry Group. That's all I have for this stock fight between Coventry Group and Korvest. If I was comparing both of these companies, for me personally, Korvest looks like the more interesting proposition right now. There's a few reasons behind it, in particular the valuation metrics, and even some of their growth in their financial metrics, and also the positive sentiment behind the company, just looking at the chart. Nice developed uptrend, but the best time to take a visit or to have taken a position in Korvest was a few years ago when there was that breakout in the share price in 2019. If you have any questions about Korvest or Coventry Group, I'd love to hear your thoughts. These companies have been on the ASX for over 50 years, and maybe now is the time for both these companies to absolutely shine, because it's taken a long time to get to this point of potentially shining. So leave a comment in the comment section of this video if you want any questions answered, or if you have any thoughts, leave in the comment section as well. And the last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day. Bye.